made a goof and I want to fix it. Hey everybody, this is Spooky's Revenge. We're back with another episode of the $500 5-year challenge, and I just kind of want to apologize for the last video. When I was recording it, I used the wrong setting in my recording software, so it just recorded the Webull screen and not the actual chart that I was walking you guys through. So hopefully the audio was still enough to make it make sense, but I want to walk through some visual stuff as well, just to make sure that it all clicks. So I'm going to triple check this and make sure it's recording the whole thing, and I'm going to toggle screens here and just make sure that it switches over. Okay, so we're all good. All right, so just to get started here, here's my trading log for the day. I've traded Monday, Tuesday, Wednesday, Thursday. Yesterday and today we've taken small losses, and it's okay. Yesterday I invested about $84 and I lost $4.57. That's the market was selling off, and the low float runners kind of deflated a little bit, and that's just the nature of these low float runners. So today, I invested $83.95, and it's 3 wins, 3 losses here. Now, the reason this is still negative is because 2 of those losses were double the size of the normal positions, because normally it was about $10 a position. But for these, you can see that this one here was $20.49, and this was $22. So that's why you're seeing that. So it's really akin to about 3 wins, 5 losses. Okay, but overall, I lost $4 today. It's okay. So Monday, Tuesday, I made, $12 to $14 per day. Yesterday, I lost $4.50. Today, I lost about $4.02. So I'm not too upset over these little red or flat days. Even though like the percentages might look a little bit drastic here, like here's a 12.5% win, and these reflect the actual fills that I got. So that's why I want to start being a little more transparent and more accurate specifically with the numbers that are represented here. So in this case, I got and just to help you guys read this, when it says like +8 in parentheses here, that just means I acquired 8 shares. So $1.26 per share, I bought 8 shares, and then I sold, so -6 means I sold the shares at $1.53, left 2 as a runner, and I sold those other 2 at 108 when it fell back down. So altogether it cost me $10.08, and then I received $9.18, and then another $2.16 when I sold those last 2 shares for a net profit of $1.26. On the $10.08 that I invested, for a net profit on all dollars invested of 12.5% for that trade. Okay, so I don't think it's entirely accurate to use the like the share, the price range P&L here for percentages, because that's 18.05%. But if you factor in the fact that I've scaled in and out, that's not accurate. So I just want to make sure that that's clear, because as this series develops, we're going to start considering more about raw values, and specifically the 1% rule. So if I use that, then I would be up 3% for the day, right? Because that would be -3 + 6 is +3%. So it'd be a predictable outcome every trade. But let's go ahead and dig into what the actual trade setup was and the strategy that I tried to walk you guys through. And I might have to go back and look up those tickers, but it's the same concept, right? So I'm using the 15-minute and the 3-minute, or the 15-minute and the 2-minute for my entries. So when the day started, right, this is kind of what I saw when I started up this trading day. And right here, I don't know if you guys can see it, it's very pale. That's the pre-market, and this is market open. So basically on the high time frame, all I did is I'm going to erase that line there. I just drew a vertical line when I got a bull signal on the 15-minute time frame, and that tells us we're in a bullish state, where we have bullish bias on the higher time frame. And then when we got the bearish signal at the end of the day, I drew a red vertical line, and that's it. All the trades that I look for are within those 2 lines. If I'm trading long, I'm only going to see bull signals on the lower time frame. So to accomplish this, now this one I didn't take because this was pre-market. This was 7 o'clock in the morning, and it was on the same candle that this 15-minute thing hadn't closed yet. So that doesn't count, which is why I'm not trying to, BS anyone. I'm not going to try to claim that as a profit. It just doesn't make sense. But this one, however, did. But this signal here was pre-market. Okay, so what I did is I used the candle's range, right? Same as the secondary entry candles. I used this range as a pullback. So when the price pulled back here, as soon as it broke over this candle here, I looked for an entry. So I grabbed my entry right over here. I set the stop loss down here at the low right here, which is where the stop loss would have been over here. And then a 1 to 1.5 risk reward. I could have gone 1.2 or 1 to 2, I'm sorry. But it was market open and I didn't trust it. Now this one actually popped up pretty high, so I think I got a higher fill when I sold. Let me just confirm that. I sold at 153, which was somewhere right up here. Yeah, right here. So I didn't sell right at the target. It moved pretty quick, so it just popped up and then it sold off. I actually saw it when it was up here, but I was trying to type in the chat, so it kind of slowed me down on my sell. But I want to make sure that you guys get the information first. So with that said, I just took my profits. I only had I had 8 shares and I sold 6, so 75% of the position got sold. And then my 2 shares here, price just kind of deflated and fell back down to my stop loss, and I stopped out, and that was it. Right? So nothing crazy there, just a single trade. Entry, again, was based on the higher time frame pointing us in the upwards direction, using a lower time frame signal for entry, and then we can ignore this because it's not in direction I want to trade. Next trade here, I just waited for the next bull signal to close, entered on the open of the next candle, set my stop loss down here, which is where the stop loss puck was. And then for this one, I set a 1 to 2 risk reward. And in this case, it stopped out. So specifically, this is kind of what I want to talk about. This wick right here violated the stop loss, but it was a wick. Okay, so it closed just above the stop loss level. And when that happens, right, if the price breaks down, let me start over. All right, there's 3 different ways we can handle a stop loss. Okay, so the first way is to just use it as a hard stop loss and just take the loss, move on to the next, right? The second way is if we see a candle push down below the stop loss in real time, we can wait to see if it wicks back up. If it wicks back up, we then use the bottom of that wick as an absolute hard stop, because if that low is violated again, we just want to get out completely. Even if it does expand our risk range a little bit, it's a viable strategy to keep you in the trade to avoid, wick outs and stop loss raids and stuff like that. Now, the threshold, right? Because a lot of people are asking me like, well, how do I know, when it's just a wick and when it's actual sell-off? And the idea there is that if you take your original stop loss and your profit, that gives you a 1 to 1.5 or 1 to 2 risk reward. So you can just take that profit range and extend it down here for a 1 to 1. So you're just extending the risk range a little bit, but you don't ever want it to go over that 1 to 1 risk range, because then you're looking at a disproportionate loss and rather than a 50-50, right? So you expand your risk range a little bit, but not too much, and then sometimes you can stay in the trade and get a profit. So as you can see here, we just stopped out, right? And I think that sell was at $1.06, right? So I bought 9 shares at 116, 10 cents lower. I sold at 106, and I took a loss on that of 90 cents altogether on $10 investment. Okay, so not the end of the world. Then the next signal here at $1.12, right? Again, we got the bull signal. I entered on the next candle. Stop loss was down here after this candle. And in this case, it just went up. We got a 1 to 2 ratio. Now I could have, if I was responsible and patient, I would have just entered on every single one of these candles, just a $10 trade each time for 8 trades, but I didn't because I was trying to share multiple tickers and multiple different types of price actions. So if I was just trading on my own, that's all I would do. I just look at one ticker and just let the trend go. And as you can see, that would have been pretty profitable today, but I didn't do it. So the 3 trades that I did take, I bought 9 shares, right? I bought 9 shares here, and then at 124, right? So right up here at target, I sold 7 of them. So I kept 2 as runners, okay? And then one of my runners, I sold at I sold at $1.44, right? So up here, 144, okay? And then on the way back down, I sold the other one at like 127, I think, or 125, I'm sorry. Because the stop loss puck was in effect at that point because we were above my price range. And I just wanted to get out of the position so I could go focus on other stuff. So easy trades. I didn't have enough settled cash to trade this one, and that's okay. I don't want the FOMO to kick in. And of course, this one I didn't have settled cash. Plus, I don't want to trade something going into close, right? It's just not safe for these day trades. So that's the basic breakdown. I mean, it's the same strategy we've always used. And, just to be more consistent here, I'll show you an S-O-U-N. I almost said a ooh. And it's the same strategy. All right. So market open was over here. We got a bull signal, bear signal, bull signal, bear signal, and then a bear signal after hours. And I only got the one trade opportunity here for a bull opportunity based on my personal preferences. So in this case, market open was right here. We got a bear signal. So we didn't really get our first bull signal until 11:45 a.m. and that's right here. Okay. And this one I actually messed up because I saw this one here and I was in a hurry and I was distracted and I misinterpreted this as a bull signal, so I entered and I shared that in the chat. I was like, well, it was an accident, but I'm in it anyway. I'll share the levels. And that's, I got in at 344 for 3 shares. I sold 2 at target, 369, and then I sold the remaining share at 332 when it came back down. So I sold 2 shares up here, 1 share when it came back down here, I think it was, for my stop loss. So not the end of the world, but it just didn't keep pushing like I expected, and I didn't really wait for the cleanest possible signal. So if I had, I would have probably taken this one. That would have been a loss, and then I would have taken this one, and that would have been a win, and then I wouldn't have taken any of those 3 because it was towards the end of the day. CHNR, right? And this is something not a lot of people do. I'm going to show you my losses, right? It's not just about profits. So on the 15-minute time frame, this is the day, right? We got 1 bull signal, 1 bear signal. So again, I'm just looking at the bullish section, right? And then within that section, I'm only going to look, for this one, I was on the 2-minute. I'm only going to look at the bull signals within that overall trend. So this was before we got the bull signal, so this is not a valid signal. It ran up. I'm not going to let FOMO compromise my plan. So instead, I get on in this candle. I set my stop loss here, and we just hit the stop loss. So in this case, we had another wick situation. We wicked. Price came back up, and then I put a hard stop on that immediately. Price came back down, and I stopped out immediately. No questions asked. I didn't bother to get back in. I didn't take any bull entries after this. And this is kind of why. Price just went sideways and down. So if I don't have that green line right here, the bullish higher time frame supporting me, there's no reason for me to jump into shorter, riskier stuff just because I see 1 signal, right? And then for NNOX, same thing. Here's a 15-minute time frame. This is for today. We got 1 bull signal at 7 a.m. and it kind of stayed that way until about 2:15 in the afternoon. So after here, I missed this one. It was pre-market and I didn't want to trade it. And then 9:30, after 9:30, after 10 o'clock, we kind of got in on this one, set a tight stop loss. And right here we did the wick thing, right? We set a wick as a hard stop because it pulled back up. And then over here, it pushed back down, and then I sold after hours. So I got a little bit of a wider fill on this one. But you guys can see that there's, the intent there, right? If you're seeing this and you've got high time frame support to the upside, the intent is that this should continue to go higher, but in some cases it doesn't, and that's what we have stop losses for. So let me go ahead and look at some of these other ones here. We got CNVS. I hope I'm looking at the right day's stuff. Should have all the drawings on there still. Okay, so this was from the 14th, so yeah, yesterday. All right, so from yesterday, if I look at the 15 and 3, again, I'm just waiting for that higher time frame support, and then I look for a bullish entry in that direction after this green line, right? So I'm just waiting for this downtrend to stop, and then it pulls up, and it should keep going, but it doesn't. That's okay. I have a stop loss in place. So in this case, we just took the stop loss on that one, and that's up here, right? And as I said, I'm not hiding any of this stuff. You guys can see the entries, exits, the amount of real dollars that I made on the account, and the percentage on dollars invested. So DTSS. Right? So I'm just walking you through it systematically. So you guys, I'm not hiding anything. I'm not trying to change anything or make crazy claims. It's just the way it's traded, right? So in this case, again, we've got a high time frame support. The idea, again, was that it would pull back, continue. So we took an opportunity here, and it stopped out, and that's okay. And then we got the bearish high time frame, and it just kept selling off. So again, there's no reason to keep jumping in counter trend. Just for the one-off chance that this might happen, right? Because you've got a dozen of these, and then you've got one that goes up all the way, right? So don't let that FOMO compel you to take risks that you don't need to take, right? And then QDEL here was profit, right? So it was a profitable trade. So let me just go ahead and look at that. High time frame right here. We got the bullish support, and this is what we want: higher highs, higher lows. We just got in on a bullish high time frame right here. Bear signal, bull signal. So the first bull signal after the bullish time frame on the higher level goes on. I took my entry, just locked my profits. I didn't get the focus on like letting the runners run. Obviously I could have made a bit more profit on that if I followed the candlesticks up, or if I used higher highs, higher lows, or any number of other strategies, but I did not. And that's okay. So let's look at DBGI. I just kind of want to cover these really quick because this video is already kind of long. DBGI is from the 13th, so the day before, so Tuesday. And if I just look back here, right, same exact setup, same strategy all the time, waiting for that high time frame support, and then we look for signals on the low time frame. So in this case, we got a 1 to almost 3 risk reward. And in this case, we had 5 or more bullish candles, I'm sorry, 5 or more candles in a row with higher lows. So at that point, I just used the low of each preceding candle as a stop loss. And in this case, I just grabbed my profits and took it. I think I was on the 2-minute or something on that one. And then we got a pullback, and then I entered on this one. We got a wick dip right here, but again, it pulled back up. So this level became a hard stop, and we just never came back down to it. So I ended up taking profit over here. And then we got our bearish high time frame bias. Okay, so easy way to trade. I got $4 on that one and $6.68 on the first one. So just trading one ticker, easy peasy. BGLC is another one. This one, if I just zoom out, we've got, again, you guys are gonna get so sick of seeing this. We got one bullish time frame support. I didn't draw the bearish line because I just stopped paying attention to that one. But you can see we're just catching a piece of the trend. We don't need to catch the whole thing. We don't need to try to predict. We had the bullish time frame support right here. Didn't trade any of this. This is pre-market. Didn't trade this in a market open because I missed it. I just wasn't paying attention, and it kept gapping, and I didn't like that. So in this case, we had an entry here, right? Bull signal entry, easy increasing volume. This one just kept halting all day though, so I didn't like it. So for this one, I actually took a profit at 215 and 165. So I sold pretty close to my break even, just a little bit up because I didn't want to keep getting stuck in the halt stuff, and they didn't adjust the threshold on the exchange, so it was pretty rough, but still walked away with a nice fat profit on it. And that was it. So as far as all this stuff goes, I don't want anyone to think that you need to have like luck, right? Because it's not about being lucky. It's not about predicting or guessing successfully. It's just about having a plan. And you guys can see that I've taken plenty of losses. It's not, you know, that's between me and my tax person. At the end of the day, you know, I get to use my losses up to a certain limit for tax advantages. So that's all tracked. I'm keeping that all in a separate bucket. I have a tax burden on realized capital gains, short term specifically. And as long as I track those two numbers, the big numbers, I'll be okay as far as how I manage the refund next year, right? So I know every month, right, if I can claim $6,000 per year and there's 12 months, that tells me I can track, you know, $500 per month in realized losses to get that full deduction, right? Now I have to figure in like wash sales and things like that. But as long as I don't exceed that $500 a month in losses, I'm fine. I get all that money back at the end of the year on my refund, or at least towards my taxes and deductions and stuff. And then all the profits, I just have to make sure are proportional to those losses. Otherwise, I might have to take a bigger loss towards the end of the year if I'm keeping it small on the loss side, just to offset all that stuff even more and get a nice fat refund. But that's part of the strategy, and it's okay. So if we look at the portfolio here, you can see we had the Tesla money come in. We were at 2760 or something like that. But today we've made 4283 because we've got the passive income from dividends being paid in. We've got some passive growth here. You can see Johnson & Johnson, Tesla, pretty much everything went up except for this one, which I'm just waiting for them to cash out. So all these positions went up today. So I made a net profit just hanging on to these positions. And I also had some trading P&L from the profits and losses, which actually lost me $4.02. So that's my realized P&L for the day. So, you know, again, it doesn't have to be super complicated. If you don't want to do any speculation, you don't have to. That's why I'm doing this whole series and showing you all the different aspects of it. If you're in the Pennybois premium section, I'm walking you guys through these trades all day from beginning to end. Let me pull that up actually, just so you guys can see. If we go ahead and just look right here, here's my recording, right? You guys can see I'm sharing everything that I have. It's not, there's no voodoo here. If I just scroll up a little bit, let me just see here. What's another? Yeah, like this one here, I said that would have been a winner on IFBD, but as I mentioned, I missed it. There's no reason to chase. So it's not just about calling out entries after they happen. It's, you know, I'm calling them out real time as well as the ones that I'm not trading so that you guys can see, you know, there's plenty of opportunities. I don't have to sweat it if I miss something, but you can see right here, I kind of walked through the IFBD sell. You know, we had 4 consecutive candles. I was waiting for a 5th. We didn't get it, blah, 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 blah. So I walked through why I was selling one of my shares. The 5th candle violated. So I was just looking for this pattern over and over, and it didn't happen. But I can also show you guys, if I can find one, where I set my sell orders early. That way I don't have to panic at the moment. Sorry guys, I'm just trying to find one specific example. You know what? I'm just going to say entering and then click right here. Okay. I had to scroll up like 2 more messages. So yeah, third and final attempt for IFBD using the 3 and 15-minute approach that I just walked you guys through. I entered at 112, stop loss, a mental stop loss at 106, take profit at 124. And then I walked through a couple other trades. And then I entered SOUN, right? You guys can see it's the same exact process, right? This is 12:02 p.m. Entry is 344, stop loss 333, take profit 369. That was a losing trade, I think. Let me just check. SOUN. No, it was a profit. I'm sorry, I forgot. But the concept is the same. I'm walking you guys through for better or for worse, just so you guys can see that overall, as long as you have a strategy and can be consistent, you don't really have too much to be afraid of. The big thing is just not overcommitting and not trying to gamble and trying to predict things, right? Once you figure that out, trading gets a lot easier. And I'll stop rambling now because this video is 21 minutes long. So I will see you guys next time. Thank you all for watching and have a good day. I also realized I didn't share the screen when I was doing that. I'm sorry, guys. I know you're going to hate me for this. Let me just pull this up over here. I'll get to that last part really quick. So entering right here. So this is where I was saying third and final attempt IFBD using the 3 and 15-minute approach. Here's my levels. Here's the chart showing that I took the entry. Entered this one, entered this one, and then this is as it approached the target, IFBD. SOUN was pushing up. A couple other recaps there. Sorry, I was trying to skip right here. So SOUN hit target. So I walked you guys through how I managed that position as well. And then here's just the total screenshot of all the positions that I had open and all that good stuff. So with that said, I'm going to end this recording now because I'm just going to start rambling again if I don't. And I will see you guys next time. Thank you all and have a good day. Bye.